All right, guys, so in today's episode, I'm with William Noel of Elkhart Group. He is a mobile home park investor, and I believe you focus on other asset classes too.
Yeah, mostly mobile home parks. We also manage a couple CoLiving Homes,
Okay.
which are like dorms for people post-college,
Yeah.
usually pre-children.
Cool. So yeah, we're here at MHI, and I'll let you guys listen in on just our conversation. It's our first time actually meeting.
Nice to meet you, Armand.
I know I finally have you on the radar. Hopefully we can get a deal done eventually.
Yeah.
So yeah, what's kind of your whole role in the mobile home park industry? I know you guys have, I believe, one park now.
We have about 2 years ago we sold all of our parks.
Yeah.
We had 30 to 50 space parks, a handful of those. We sold them all. We were going to kind of get out of the business and try and do something else.
Yeah.
Couldn't find anything else that we liked
Okay.
as much as this, or that we felt like we knew how to do.
Yeah.
Also, prices were getting a little more expensive, and so didn't want to take a risk of jumping into something new and potentially falling flat on our face.
Yeah.
So we exchanged those parks into 2 bigger parks. So we have now 4 parks, 600 lots.
Okay.
Probably if I get to 1,500 lots, I'll be set.
And now, how did you get those deals done? Like, are you guys structured like a syndication on a deal-by-deal basis? Or okay, so
deal by deal, friends and family, and a few professional colleagues.
Okay.
And so we'll raise the money, form an LLC.
Yeah.
Usually a TIC. We'll form a TIC because somebody is exchanging
Yeah.
into it, and they need to come in with the same LLC name that they had when they sold.
Yeah.
So we're buying usually with TICs.
Okay.
And our LLC with our friends and family investors is one of the TIC members.
Very cool. And now with the mobile home parks, what kind of deal flavor would you say you guys focus on, and what regions? Like, are you guys looking for more scale with light value add, or do you target like heavy park on home turnaround parks, or what's kind of your strategy, or is it just if the numbers work, the numbers work?
We, I think, when we're telling people about what we do, kind of get the most pleasure out of telling people about the mobile home park that you go into that has crazy potholes, trucks in all the yards, nobody's out hanging out on their front porch, there's dogs running everywhere, and then you go in and pave the streets. All of a sudden the kids are riding their bikes in the streets for the first time. Somebody's cousin is driving in going, I ain't never seen anything like this before.
Yeah, and you turn it around to a real family neighborhood.
Yeah, that I think gets us the most excited. I think when we first started, it was very much about getting kind of independence, financial independence, and that's still a big piece of it.
Okay.
And now maybe some kind of purpose-driven work is a bigger piece of it now also. Than it was before, especially. So I think we love to find parks where you go in and it's really obvious what needs to be done there.
Yeah.
The most recent park we purchased in St. Louis, we went in, we bought it, and it needed some work. There was a couple vacant homes that were kind of falling over, but it didn't really need us as badly as some of the other parks that we bought that are maybe below the radar of the big operators, and so maybe nobody would go in there and repave the roads and try and bring them up. So that's kind of what I'd really like to find right now is a big infill project in the burbs of one of the Rust Belt cities, like Cleveland, Flint, Dayton, Ohio. Like a 400 pad. I saw one on a mobile home park store. It was a 400 pad park in Mount Morris, Michigan, with 100 occupied. I'd love to find something like that, where the park is just kind of sad and depressed.
Did you look at the Dayton one I was marketing? It was like 113 pads.
I did. We used to own a park in Dayton. We looked at that one, but also for the risk, everything is so much more expensive now. Our risk profile is a bit lower. Our willingness to take some risk on a project, we need to find something with either a ton of potential value or something that's a little safer, just because the prices are crazy.
Very cool.
Okay, my turn to ask you now?
Yeah.
Okay. I wanted to ask you, So you've got all these, it's very competitive right now, like in the marketplace, and there are all these, big, well-known operators. They maybe have 18,000 pads or 10,000 pads. You know that they are solid. So how does somebody like me, who's got 600 pads, or somebody who has 300 pads, who, we don't have a prior relationship yet, and probably nobody in your company, I've never bought a park with anybody in your company.
Yeah.
What's like a creative way for me to work with a broker like you that would make you want to give me first look, at something that you've got that's off market?
I would say the willingness to, that's a loaded question. Let me actually think it through.
Right, don't say anything illegal.
Yeah. No. If you send a couple hookers my way, I'm kidding. The biggest thing, especially when a lot of guys always call trying to build, let's say someone just got out of Frank and Dave's boot camp, and they're like, oh, call brokers and get on their radar. A lot of guys call, and it's we know they're not going to pay anywhere near as high of a price as someone else would. Obviously, the surety of close is less with, let's say, an independent group rather than the large group that we've done 10 deals with. But really, it's where a lot of the newer buyers that I've particularly worked with is, were they willing to get creative with me on the front end? If they want the first dibs off market, well, they have to be willing to seriously look at a deal when we have very limited info, and no matter what happens, still be willing to cover some type of fee for us, even if it's a very sloppy type of deal. So let me give an example. There's one in the outskirts of Charlotte, North Carolina, with a buyer group that strong, well-funded, independent buyers. They have about 12 parks, but they're not like one of the large funds that we've done a ton of deals around Charlotte, North Carolina with.
Right.
Like Ryan Norris here, for example, we've done a bunch with him, but I gave it to this particular buyer because I had it under contract before. It fell out. Me and the seller had really rough relationship after it fell out, because she was the whole idea was going with you was surety of close, and now it's not closing. He went out and met the lady himself. We had very limited financials.
After you introduced them? After
introducing them, yeah. And he really helped push it across the finish line for me. Not saying you need to do the broker's job, but a lot of the times I would, if I call you on a deal or a broker calls you on a deal, and hey man, I don't have any full financials, I have an outdated rent roll, you're gonna have to work with me to try and get the info and get this deal done. Maybe we both go out there and meet the person and do stuff. I think that would be the way to get first dibs on the deal, rather than hey, can you just make sure I get first dibs? I would say that insures, and assuring if you call me on this, I'll make sure, even if the seller doesn't want to pay you a fee, we'll still pay you $50K on the side or something that. I would say that.
Yeah. Does anybody call you and say, hey, if in addition to what the seller pays you, we will also pay you a $20,000 fee if we end up closing on it?
I know that I've been offered that before, and I know that's a strategy other buyers try to do. I don't think that's as relevant as just be surety of close. And what I mean by that is, there's a lot of guys that are newer and will approach me and say that, but they're still not the most likelihood guy who will close in the deal, rather than a more established buyer.
And somebody helping you get reel the seller in and sink the hook that's huge.
That's more important to me than okay, you get an extra $20K, but it's I don't even know if you could close the deal. What if we get outbid? Someone who's just really active in it, and it makes sense for them to buy. So all right, you just closed one in St. Louis, so you guys have one there. Knowing that, now if I have parks around there and you're willing to go meet the guy, if I just can't do it next week or something, but you're willing to meet him for me, it's okay, I have a high likelihood he'll pick your offer and with us rather than someone else, because you're willing to go meet there and meet him and be more actively engaged in the deal rather than
interesting.
Yeah, I hope that makes sense.
Yeah, no, that does, and that's really interesting, because I'm sure that there are a lot of times that you get some information and the seller doesn't know if they want to totally sign a brokerage deal yet.
Yeah.
And then
so most of the deals I've done, I have fully my deals, because we're a team environment, so we do kind of bounce off and help execute each other's deals and share buyers and everything. I've done 15 soup to nut deals myself. 12 of them were off market, never a listing agreement, buyer paid fee. And a lot of times when it's buyer paid fee, once we agree on a price, the mom and pop seller, like they'll just add on the fee to the purchase price, so that way you can still roll it with the financing.
Right.
So it's never really like out of pocket buyer paid fee, but some of them are out of pocket buyer paid fees. But yeah, I would say like on the off market stuff, like if you get a call, if I know you're willing to get like kind of scrappy with the deal alongside me, I think that gives the most likelihood. Like if I have, let's say in Imperial, Missouri, which is like outside of St. Louis, I had a seller there that like had almost no financials, like collects cash, and we're like going back and forth trying to get info. And let's say that was an example of a deal, and you're like, oh, I'm actually doing a site visit to my property in St. Louis. I'll go meet them, and like I could hit, like just off like verbal loose back in a napkin, I'm probably in this range, and it's like actually a realistic number. Hey, let's like set up the meeting, fly out there together, and kind of get scrappy and work the deal together. I think that's the best way to get first dibs at it.
Interesting.
Yeah, because if it's just going to be money, every other group will say,
right.
Well,
I'm not going to have the most.
Yeah, like some other group's going to, like a larger fund will probably pay significantly higher.
Right.
But if it's like that scrappy deal that the larger fund won't look at because they want clean financials, well, if we can get scrappy together on it and like figure out like an example, like one of these, a Kansas City listing actually I'm launching now. You might want to take a good look at this. It's only 50 pads though, but infill type deal. Anyways, like that was an example. They had their last updated rent roll was from October, and they don't know what was at the property. And like so I flew out there, did like a site count myself, even knocked on some tenants' doors because I had to figure out, they didn't even know how many RTO homes they had versus park owned. So like I had to ask.
Must be nice.
So I asked some of the tenants like myself, like, hey, do you own this home, or do you know if they own the home or whatever? And had basically built the rent roll myself for it.
That's hilarious.
But like in an example like that, if they weren't trying to list it, and I was trying to slam it with a buyer, and just slamming it's what I kind of just nickname it. Like I'm trying to slam it with you as a buyer, and like you could help me going out there, we meet the seller together, we kind of get through the financials, even though I know someone might pay, let's say 200, 300K more than you, well, I'm more inclined to try and get it done with you now because you're willing to get in the fire with me.
Right.
Yeah. Right. I know that was a long answer to the question.
No,
I hope that kind of gives the scope.
That does. That's interesting.
Yeah.
And you think other brokers operate similarly, or is this kind of unique to you because you're a driven?
I would say it's somewhat unique to me. I know a lot of, it's hard to say. So let me give an example. Russ on our team, you know Russ.
Yeah.
He's very old school. If you can't get good info, if they don't want a realistic number, don't work on it and try and hunt your next listing. I'm more of and which reflects what I've closed, off-market deals that were sloppy as shit.
Yeah.
Like all of my deals have been sloppy, like not by the book in any means. I think more and more brokers are doing stuff that way just because the market's so aggressive now. Like people aren't waiting to go on market. There's unsolicited offers left and right. There's wholesalers you're competing against. So it's very sloppy now. Maybe 3 years ago it was way more streamlined, but yeah, I would say that's partly unique to me, but I don't know. I do know other groups that are just doing off-market slam deals. Like some of the other groups I know will directly, like most of their cold calls and direct hunting is for the buyer in mind already.
Right.
And I've strategized like that too. Like when I closed a deal with Ryan Norris years ago, like most of my calls were just North Carolina focused, trying to get him another deal rather than me calling to get a listing.
Right.
So I don't know if that's unique to me though. It's tough.
Yeah, I saw on your website that you like to box, and there's not too many brokers doing like video blogs and stuff.
Yeah, I'm trying
to. It's definitely hustling.
Yeah, I'm trying to. I think it's maybe it doesn't pay off now, but I think if I had a track record of like 5 years on the internet of me chasing deals, doing deals and stuff, my theory is that if I ever wanted to move to the buy side and I'm trying to raise money for my first few deals, well, here's my track record.
People know of you.
I'm a known guy in the industry. You could watch me doing deals. Like I'm in the field. Like I think that would give me a good background. Or like trying to persuade a lender to, even though I don't own a park already, if I'm trying to buy my first one, a lender could see like, oh, you actually are in the field with parks. So
right.
Maybe a little more comfort there. I don't know though. I haven't gotten any real payoff with it yet. But I guess that answers the question before I get too long-winded and scattered.
Yeah.
Question for you then, how'd you get into just real estate as a whole? What's your background?
Construction work all in high school. First job was doing roofing.
Yeah.
And I loved it. I was working with this Honduran guy and learning Spanish and learning how to use tools and hanging out with older guys that were kind of like rough and then had a couple other jobs, but I was working at a biodiesel company that went bankrupt. Okay. I didn't end up making any money, and I thought I wanted to get back to something that's like solid, construction and I was right about like 2008, 2009.
Okay.
And so it was cheaper to buy stuff than it was to build it, and so there wasn't a whole lot of construction work going on. And one of the guys that I worked with said, hey, let's go buy some condos, some single family homes that are, they're selling for $30K and you couldn't build them for $100.
Yeah.
So we did that, and then saw a mobile home park for sale and thought, okay, well, this is just a big construction project, which it wasn't. I fell flat on my face on that one. I didn't realize all of the infrastructure that's involved. There was a well. Yeah. The well got contaminated with uranium. There were septic tanks. The septic tanks were blown up.
Yeah. Oh, so you had your fair share of.
It was this one park up in Fresno, and it was just a disaster. And my dad was just watching me, just kind of like floundering at this place. And he ended up buying my wife and I tickets to Frank and Dave's boot camp.
Okay, cool.
So went everything Frank was saying we were doing wrong. Yeah. Buying a rural park in the middle of nowhere with all private utilities and tons of RVs that people were living in full time, and but we just stuck with it.
Okay.
And
very
so
cool.
we've kind of been doing that, and then looking for what do you do when the market is plateauing for so long. It's hard for us, like you're saying, it's hard for us to compete with the guys who can clearly pay more money and have a longer time horizon and have more cash reserves and have better lending deals.
And especially like with the interest rates and everything changing, like some of the larger groups just to execute on the contracts, like financing fell through, they just paid cash.
Right.
And that's something that a lot of it's hard to compete.
Or if you're really big, you can go get money from the pension fund of the police department that charges you 2.25% when everyone else is paying 3.5% or 4%. So we've been we typically have sourced stuff directly from owners. Okay. And it felt to me like a few months ago, like the broker deals we were seeing were starting to
come down to reality.
Come down in price a bit. So I was started to reach out to brokers again. And
sorry to cut you off that for getting more likelihood of a first call from brokers. If you can, send me an exact list of what you own, like the name and address of the parks. So for some reason, when I ask owners that, they try and be vague about what they own, but what I always tell them, it's like, if I have your property and ownership linked in the database and I get a potential deal nearby,
for who's close
I do a radius on a map, and I see who's an owner I've talked with before here, and they're the one I call.
Right.
So if I have you logged as the owner for this property, you will, if I have something anywhere near there that makes sense, I'm going to call you.
What database is that? What do you guys use?
We use a skin of Salesforce called Rethink, but it's Salesforce. We were using one called RealNext before, which I think was really good, but Salesforce has a cool geo search, they call it, where let's say I have a deal at the Dayton, Ohio one, I could actually just draw a radius on the map and it auto-populates all the owners of the parks we have logged in there.
Oh, nice.
So my call list, when I have the listing, it's all right, who's the guy who owns exactly the same type of property within 50-mile radius? So that's a big one.
Yeah.
I would say that's the first thing before you even worry about trying to get tight with us on deals.
Send the addresses.
Yeah, let me know the exact part you own.
Cool.
Yeah.
Yeah, the technology piece is really neat.
Yeah.
Trying to figure out what kind of technology do you put in place to help either operate the brokerage or operate the park.
Yeah, my whole big thing is like with this MHP value branding, it's like most of my leads now come through the internet landing page I have that says like free evaluation sign up thing.
Mm-hmm.
And so I can give you an example. This week I had 2 new signups, one of which already sent financials to me, and I didn't even talk to them ever.
Wow.
So I've found this new thing.
That's your thing is starting to click.
Yeah, so I found this new thing with like the internet landing page, and it's just from like text blasts. So I'm trying to automate because we're very old school.
And do you buy advertising? Like if somebody searches for sell my mobile home park,
I haven't yet. That's my next stage. So right now, my first thing is, and sorry, I know we're bouncing around a lot.
That was great.
I'm passionate about this part. So a problem we had in the database is that we would lose, the only way we'd stay in contact with people is calling them once a quarter, every other quarter. And if we didn't set the follow-up, we'd kind of just lose them in the database. And then I sent out a text blast to the whole database, just trying to test out how this text blast works. Like, is the send rate going to be good, whatever.
Rethink will allow you to do bulk texting?
No, I use a company called Simple Text, and I just pull my list.
Cool.
Well, I have it automated now with Zapier, but I would just pull the list manually.
Yeah.
Sent out the text blast, and I got like 40-something responses. I already sold my park this year, or oh, I just sold my park, and I go back to log in the database, and they're all people I've talked to. And I'm like, only because I'm manually following up did I miss out on potentially 40 deals. Like imagine if I just did 3 more of those, that changes my year. So I'm like, all right, I'm thinking about this wrong. Everyone in the brokerage space is lack of a better term, a fucking boomer. Like, there's got to be a better way than this. So then I was like, all right, I should automate my text follow-ups once a month to my whole database, because like, why wouldn't they just get a text from me if all it takes is a click of a button? And then I was like, well, if I'm going to do text blasts, why aren't I emailing them too? And then I was like, emails never work. Like, no one gives a shit about an email. But then I thought, what if my email routed to a page with a video of me, so at least they know who I am. So that's why all my emails have my face in it. All the links go to a page that says,
like, it's starting to make a lot of sense.
Yeah, it's like the sales funnel.
Yeah.
So then cool. Every time I'm on the phone too, I always pitch, let me do an evaluation for you. The mom and pop style owners, they're like, what do you mean an evaluation? So then I was like, let me make a video I could text them, say, oh, this is an evaluation, let me just text you a video. And it's me explaining, here's a 5-page thing, we tell you exactly what your park is worth. So then, like, now I do the text blast and the email blast all route to the landing page that has a video of me explaining what the evaluation is, 100% free, and then they sign up, and then from the sign up I have an automated email telling them what financials I want, and if they can't provide financials, answer these questions. So it's gotten to the point now, like once a week, I get full financials on a deal without ever speaking to someone.
Wow.
Completely automated.
And you're texting them once a month, emailing them once a month?
Emailing once a week.
Emailing once a week?
Yeah.
To a list of 30,000 people?
Right now, so we have a shared database. I pulled only the contacts that I know personally because I'm not trying to steal other people.
Right.
Ethic. Now, I know other people would just fucking rip the whole database. I'm not that guy. Yeah. But like, I have like about 5,000 people see my weekly newsletter blast. And then you get my deal blast now, I think.
Yep.
Pretty sure.
I think so.
You might be getting the weekly newsletter too. I don't know.
I got an email this morning. I don't know
That's
what
a weekly newsletter. That's part of the weekly newsletter. Okay. Like that I had set like last week, but anyways. Where was I going with that?
How much time is this taking you per day just building all these systems up?
That took me, since November to March, I pretty much was full-time trying to clean up data, brainstorm the process, and set up and test the processes. But now it's literally I click a button and I get...
Yeah, it's so worth it.
Yeah, now it's like my follow-ups, like I'm not doing anything. Like literally this morning I'll show you. Let's see if I can actually pull it up. I'm actually curious. Like literally this morning from that email. This one's someone who signed up for my buyer's list, and then here's a Goldsboro deal that signed up for an evaluation. Literally just from this morning's email. Never talked to them before. I don't know who this person is.
Oh, that's cool.
It's crazy. Yeah. So I think I'm on to something. But my next thing is like, that's going to current data I do have from like manual research lists and stuff. My next thing is, well, how could I get rid of cold calling and outbound, like to get new people in the funnel? Because right now there's the funnel set up. How do I get new people in the funnel? The only way right now is by cold calling them, confirming info, then plugging them in the funnel. Once I have their email and confirm their cell phone that they own the park, they're in the funnel. But how do I automate that? So my next thing is ads, and I think Facebook video ads is going to be my next big thing.
To get them to send their info.
Send their info, and then they're automatically in the funnel. Yeah, that's my next thing. So that's my next step to the funnel.
Cool, man.
Yeah, but I think my value add to it, or not value add, but my uniqueness is no one else of the other brokerage teams are willing to do like videos and be that guy on camera. So since I was just making stupid YouTube videos for like the last 4 or 5 years, I'm like, oh, that's like a skill I've sort of learned being cool with. And I can take advantage of that.
People start to feel like, just like somebody might love a celebrity that they've never met, but they see them on videos, they follow them on Instagram, and they feel like they have a relationship with them, even though that person has no idea who they are.
Yeah.
You know, if somebody's watching your videos and you have no idea who they are, but they have been watching your email blast for 20 weeks, they've seen 20 videos of yours, and they go, I like this guy.
Yeah.
You know, I feel like I know him. And then they send you their info. It's genius.
Yeah, like today, one large operator, and I kind of made myself look like an idiot, but I'm talking with them. I'm like, so what's your role in the industry? Do you like own parks? And I don't want to say his name, but pretty much he has like he probably is the largest owner here. He's a single guy, doesn't raise outside money, and I think his portfolio is probably worth $1 billion. So he's like certified like billionaire almost. Mm-hmm. And I'm like, yeah, do you own some parks? He's like, oh, I've been wanting to meet you, Armand. I see your email. I'm like, who's this young guy who keeps sending me all this shit? And it was funny that he knew me from, I've never talked to him, but he knew of me from seeing just video after video. So yeah, it's kind of paying off and stuff.
It's not a lot of, I don't think there's a lot of fresh blood in this industry.
Yeah, so I'm trying to spice it up a little bit, you know?
Yeah, that's fun.
Question for you. What's like man, we kind of got cut off from it. What's like the focus then as far as the mobile home parks you're hunting now? Are you looking for stuff around the current things you hold, or are you trying to break in any new markets?
Probably the only reason that we ended up bidding so high on that St. Louis deal is because we already owned one there, and we knew that it was a POH heavy deal, and we knew that the POHs could sell for a lot of money, and that
you're right in St. Louis too, so you know.
We're right in St. Louis. We were going to be able to share an on-site manager. So yeah, getting them in existing markets is great, but no, I think I live in San Francisco, so I'm managing parks in St. Louis, in Birmingham, in Wichita. If I got one in Flint, or we had parks in Dayton and Fort Wayne and Comanche, Texas. It doesn't really matter to us where they are.
Okay.
I think we'd like to have enough size that we can hire. We've been trying to hire really smart on-site managers. Yeah. And that takes a little bit more money, so a little bit more fewer more lots.
Yeah. Out of curiosity, what do you pay like a full-time on-site manager? What's like
we just bumped one of our on-site managers to $50K a year as her base salary. Yeah. And then she makes a lot of bonuses.
Okay, it's like every home she fills or whatever, she gets something.
Yep, every home she fills, she gets something, and we're doing, it's a 100-lot infill, one of her parks. Okay. It's a 200-lot park, and so.
I'm always curious in my underwriting what to assume as far as like, because I hate being the broker that runs
says this is a 9 cap,
it's
and then somebody looks at your expenses.
And a 25 ratio, 25 expense ratio.
Right.
Yeah.
I mean, you know how it is. We have gotten more asks for raises in the last 3 or 4 months from our people that we work with. Yeah.
Well, the cost of living everywhere is going through the roof right now.
Cost of living is going. I mean, buying a hamburger you can't buy a hamburger for less than $10 or $20 if you're here in Las Vegas. So we're trying to pay people a little bit more that work with us. Just because we also don't want to lose anybody. If one person starts being unhappy, and the whole team gets kind of unhappy. So, we're paying about between 40 to 50K.
Cool.
For park manager. I had a question for you.
Yeah.
What's the nicest gift you've ever received after closing a deal with a buyer?
Man, I've never gotten any crazy gifts.
Nothing.
Bottle of liquor, nice bottle of wine, a closing dinner. No, I haven't done any crazy deals though.
Yeah.
Like it's not like my biggest deal is 9.25. My average deal size
pretty
that's
good.
pretty big. Yeah. But like that one, I had Enon, who owns our brokerage. He was involved because the buyer was someone he's partnered a deal with in the past, so he kind of had the relationship there. I just found the seller. Yeah, most of my deals are probably 1 to 3 mil range, I'd say.
Cool.
With some getting up to 5, but I seem to always be getting, and maybe I just need to target my data better because I'm doing more of a shotgun approach rather than really honed in. But I plan now that I have systems in place, I'm covering the whole database with the automation, and now I could focus my personal call time into those like
Bringing the bigger people
stronger MSA parks like St. Louis or like the Kansas City listing I just brought out. What kind of deal size are you hunting right now?
The most recent one we did was 134 pads. It was 6.4.
Nice. And that was the St. Louis one.
That was St. Louis one.
Yeah, it's aggressive, man. 50, that's like in the 50 a pad range.
It was aggressive.
Yeah.
It was aggressive. There were 74 park-owned homes.
Yeah.
So
that's why a lot of the bigger guys didn't want to take it.
We were up against 6 other buyers, and some of them were bigger guys.
Yeah.
But we were right in the middle of it when the rate hike happened.
Okay.
And so I think some of them didn't want to raise their price above ours because of the rate hike, maybe some because of the park-owned homes.
Cool.
And we just got kind of aggressive with it, and glad we did. The park-owned homes, when we went and toured them all, they were in great shape. The maintenance guy, what's up, Joe? Maintenance guy did a great job of keeping the homes in good shape. So,
do you know Nick Najar and Jason Ramshaw?
Yeah. Nick, when we were out there looking at that, Nick and my partner Brian and I went out and had a couple drinks together. Great guy.
I was just staying at Jason's house last week because
he seems hilarious. I haven't met him in person.
He's a funny guy.
Yeah,
he's exactly what you imagine him to be like.
Yeah, he talks on the phone just like one of my other buddies from San Francisco who I love, and I was like, man.
Yeah, Nick I like a lot. I haven't been able to get a deal done with him yet, but we've crossed paths and overlapped on so many different things. We just coincidentally happened.
What were you and Jason chatting about, or?
Nothing. You know what I like about, nothing in particular, but what I like about Jason is like he's on the wholesale side and I'm on the broker side, and we really overlap what we do. We're basically middlemaning deals. But the thing is, it's a significantly different pitch from the wholesale side versus the broker side, and I'm starting to theorize that the wholesale pitch is much more effective, albeit less transparent about what you're really doing with the property. But we're just like debating on what's more lucrative, of like how to be middlemaning.
Yeah,
and we're sharing processes. He has really good processes for like right now they have 50 parks under contract.
Wow.
Like they really like move quick on things. Now, a lot of them they're way overpriced on it, and I think he jumps the gun too much to putting stuff under contract that aren't sellable. But he definitely has like a very unique spin on his approach. That
50's a lot.
Yeah.
He's kind of got similar thing to you where he's kind of branding himself. He's like
the elephant stuff.
Elephant thing. Yeah. And the wholesale thing is tricky. You know, when I feel like you probably will close much higher percentage of the deals.
Much higher percentage.
Yeah. But maybe not get quite as many under contract.
Not as many under contract. And then on the wholesale side, and maybe this is like broker splits do take a lot. Like I'm on like a 60-40 split, but like when 40% of every deal is going away, and now I am provided tools and other stuff, but I don't think it justifies the split. And then on top of that, because we have to stay on the up and up for licensing, on out-of-state deals that we're not licensed in, we have to pay a broker of record fee, which is 10% off the top. So I'm really only taking home half the fee at most. So even if I do a 90 to 120K fee, I take home 50, and that'll be on like a $2 to $3 million deal. Meanwhile, he could go wholesale much easier small deals, because I think those are easier just to negotiate stuff, because it's a smaller mom and pop typically.
Right.
And he's still taking home 50. So when you look at it, it's like, yeah, he wants to get more into bigger, like 50 to 150 unit type deals and get away from like the 20, 30 units. But my argument to him was, Well, the grass isn't really greener because you're 20 to 30 units. I mean, if you're doing the same amount of volume, if not more, like amount of deals, you're still getting 20 to 50K checks each time. So you're really not, the grass isn't greener doing 120 unit deals and stuff like that.
Right. And interesting, as a seller of a 150 lot park, I'm kind of imagining how I would feel if I knew a wholesaler was calling me to sell my park or a broker. I know the wholesaler is going to try and take their fee and go find somebody and sell it for more money, but the broker, I'm going to have to pay a fee also.
Yeah. The biggest difference to me, especially ethically, is we're transparent about our fee and wholesalers are not.
Yep, and buyers or sellers do not. I've seen it happen many times. The sellers do not like it when they find out that the park is being wholesaled.
Yeah.
It blows up. Their relationship blows up.
Yep.
It's.
But then the flip side is, well, if they agree to the price, I guess it doesn't matter what happens after. And that's also where I'm like, I could see wholesaling being viable with that.
I wonder if you did try being transparent as a wholesaler, if that would work, or if the person would say, well, if you can get more money, why don't I just go get more money?
So Jason, what interesting thing he does when they're getting to the end of contract timelines, when he's going to have to pull out, he'll be transparent and tell the person, hey, we're not trying to buy this ourselves. How about we just extend the contract and we'll essentially be your consultant to sell the park and still get you your price. And that's been working for him. So he's one of the more transparent wholesalers, but I know another wholesaler that's down in Florida, and his common practice is every time he has stuff under contract, right before money goes hard, he tries to retrade an extra 50K just to see if he can extract more money out of it, regardless of his fees already locked up. Like he'll have a 100K fee locked up and then still try and retrade another 50 just because. And that's his protocol for
That's what all the gorillas do. I've worked with a couple gorillas and they always do that.
Yeah, and I mean, power to him. He's making a lot of money, but I don't know if I'd be happy with that myself, knowing I just stole 50K from Susan, the mom and pop, selling her family business. Like, you're just stealing an extra 50. I don't know.
Yeah, well, you got difference between being cutthroat or not, and a lot of times it seems like the cutthroat guys end up at the top.
Yeah, they definitely.
I don't think I'm really one, for better or for worse, but.
So tell me about your the college housing conversions. I was reading up a little bit on your website. So it looks like the main strategy is all these like vacant campuses, converting them to like a living space type hub.
So we. Outside of mobile home parks, and what we did first, I've always lived in big communal housing setups, 2-bedroom house with 7 guys living in there and build bunk beds in the garage, and 1 guy's living in the driveway. And that was when I was younger, but I still like that kind of stuff. And now I live in it's like a co-housing kind of setup in San Francisco, where we're in one apartment building, 8 friends. Each family has their own apartment, but we all share one building. And so we operate a couple of CoLiving Homes, which is a big house, rent out rooms by the room. But it's not a bunch of strangers. They all know each other. Usually you get 2 or 3 people that kind of are the first ones to colonize the house, and they reach out to their friends.
And you're signing separate leases for each bedroom, kind of like a student housing gig? Or
Yes. And they love it. People stay there well into their 40s, and they form these long-lasting lifetime friendships. They maybe will go out and live with a couple of their friends from that house at some other place. As I really like it, just from a feels good standpoint. And I saw these just cruising around real estate porn online. Saw this couple colleges start coming up for sale. This was a few years ago. You look at the numbers, and the number of people applying to college is going down. And tuition is starting to come down a little bit, but tuition has been crazy high. Number of people applying to college is going down. I think people aren't seeing the value in it as much.
The sentiment of college is definitely worse now than past.
It's worse. So it's way worse.
You anticipate colleges having to close down, and now you got to and you're thinking repurpose those buildings? That's kind of
so I've seen it happen already. So there was a college called Green Mountain College up in Putney, Vermont, or Pulteney, Vermont, and beautiful huge brick buildings, 400,000 square feet. They had a biogas power plant that they had just spent $1.2 million on. They had all this cool infrastructure.
Yeah.
And it was just open and servicing students. The next year, bankrupt, shut down.
Wow.
So it's not a decrepit, been there since 1990 unoccupied, And it sold at auction for, I think, $5 million. So $10 a square foot.
Wow.
Crazy.
Yeah.
And nobody knows what to do with it. It's got 400 rooms, all this stuff. And I look at it from the same lens. I used to buy 20 space mobile home parks, and I couldn't imagine owning a 800 space park, and now I can.
Yeah.
And I look at it from the same lens. We run these co-living homes that have 14, 15 people living in them.
Yeah.
And I look at these college campuses that were just recently housing a bunch of students and think, okay, well, that could be a really cool eco village. And they've got, the campus is 300 acres. They've got gardens, and they've got soccer fields and football fields. And to do something like what you're doing with your internet marketing and shoot something about this college that makes it look really attractive, like, hey, come live here with all your friends and have a blast, and you'd be like your own little village basically, and within a smaller city. I feel like you'd attract people like that. $400 a month, $500 a month rent.
Yeah, I guess that is a good solution too, to it'd be hard to, as affordable housing is more needed, it's hard to get people on board with mobile home parks, but you probably have a better time converting people to bedroom rentals of a fancy college campus.
They're sexy. You can make it really sexy. And we had this guy draw this cool illustration of what the campus would look like after we had colonized it and made a little. So somebody bought that one, and I saw a couple more come up for sale. Okay. And there haven't been too many more, but it's usually the smaller liberal arts colleges that are going down first. And so I just kind of anticipate that happening. It's pretty risky. But at $10 a square foot, maybe you can take that risk.
Do you have do you have guys that are willing to fund it now, or that's a whole other thing once you go down the path?
I don't know. We been doing mobile home parks for almost a decade, and so
And do you raise just from a few capital guys, or do you have a lot of different investors?
We go. All of our friends know what we do, and typically they would like to put money into the parks. We don't usually have enough deal flow to accept all the money that they would want to put in. I don't know how many of my friends would want to put money into the college campus.
In a high-risk, non-cash flowing redevelopment play.
I think it would cash flow 400 rooms renting for $500 a month, and you buy it for $5 million. But it is more complicated. You own a power plant. And you got to run that, and the campuses have a lot of people working there. It's more risky, but I think we probably could raise the money for it, just because we're small. The people who have been giving us money for parks, we've been really good to them. So I think we probably could. It'd be a stretch. But there's a lot of dreamers online. There's a lot of rich people who have money, who like the dreams.
And it's definitely a sexier idea than buying more mobile home parks. So I guess if you had to get more retail money, you could probably pitch it better. Yeah,
and the mobile home parks, as people are, that development seminar today. I know more and more people that are looking at developing. And when you're developing, you're kind of no longer constrained to, okay, I'm going to buy this thing. It already has this personality. The park, and to take this park from a C+ to an A+ is going to take 10 years, because the whole town knows the mobile home park is where they all get their weed and stuff. So
who was the speaker for the development thing?
There were a bunch of different ones.
Any names off the top of your head? I'm curious who was there.
I didn't know him. He had longer hair. I didn't know. But I had lunch with a guy today who owns 30,000 pads, and he's trying to build 70,000 in the next 20 years.
Wow.
And I just think the development thing is people don't want to buy these 80s parks as much anymore. And so, they still do, but they don't for the price point. And so my guess is that people will be developing more parks, and that they will maybe not become as sexy again, but when people are developing an 800 pad park, it's going to have a pool and a clubhouse. It's going to have shade structures. People are going to be having parties there. It'll be like a a cool place to live, I think,
Yeah.
or it could be if they put enough intention into, a lot of people are talking about the community building,
Yeah.
and so if that becomes a foundation of a mobile home park, like, okay, it's affordable housing, it's convenient, and it's also community building.
Yeah.
I don't know if you read it all about the Jimmy Buffett Margaritaville subdivisions in Florida.
No, what about them? I'm familiar with them, but
Yeah, but they are like
it's basically a resort-style mobile home park.
it's a resort-style mobile home park, and the people have a great time who live
Yeah,
there. They
yeah.
love it. They're riding around in their golf carts.
Yeah, everyone
Somebody's
knows
got a party
everyone.
in the backyard.
Yeah, yeah,
everyone
yeah,
knows
yeah.
everyone. There's like one realtor that everybody knows that, and I think new developed mobile home parks could be like that if they were branded like that from the beginning.
Have you talked to the guy who owns our company, Enon?
No, not yet.
So no one knows this. It's not a secret, but just not everyone knows it. He's developing an RV park near the Villages in Florida.
Cool, yeah.
And he's in talks about making it a Margaritaville branded.
No
RV
way.
park. So
No way.
he might be someone just to pick his brain about the development side of things, because he's going through the engineer plans right now.
Yeah.
And then he's going to do, after the engineer plans are approved, he's going to do another capital raise. And I don't know, I'm not even involved. I could just be totally off of what I'm saying. But
Yeah.
I know he's developing an RV park.
They're long-term, kind of big projects, but
Yeah.
it seems like if you could pull one off.
Yeah. I know that so many markets, though, don't support developing an RV, mobile home park, just because, like, the cost of developing a park and the cost of homes now, it's hard to get the good returns for that, because you're probably all-in costs, I'd imagine, are like $30K a pad. And then you're going to have to pay $50, $60K to bring in a home. So you're like $90K all in. So if you can't even rent that for like over $1,000, like that's why I think the development you're seeing in like major markets in North Carolina, I know one guy developing a couple mobile home parks out there, obviously here in Florida.
Yeah.
But I know a lot of like the markets that do need more, like still need affordable housing, probably doesn't make sense to develop.
Yeah. I don't know. I think people are figuring it out.
Yeah.
And it is expensive to develop, but it's getting more expensive to buy with aged infrastructure.
Yeah.
And so if you can stomach buying, 100 houses, you get that money back. Especially if you can attract people who can qualify for non-recourse, mobile home financing. Then you get that money back. So.
Yeah. Any final questions? I don't want to take up too much of your time.
Yeah.
This is a good conversation.
It's
I
great.
like talking with you.
Love
Hell yeah,
with
man.
you
It's
too.
awesome.
No, let's save it for round 2.
Yeah. What I guess final thing for me, what can I do best to help you out? Where are you focused? What's like a market?
I think we're going to go scrap together.
There you go. Do you train or anything?
I did Thai boxing for 3 months in Thailand.
Oh, very cool.
And when I came back, all of my friends, I brought boxing gloves back.
Awesome.
And we would all just go fight in the yard for fun.
I want to go do a Thai trip for that, because I had a buddy that went out there, and it's funny, like some of the bars, they'd be like, if you fight, you can drink for free and stuff like that. And they do, it's cool stuff.
If you go out there, let me know. I trained at a camp up in far north Thailand, and it was so cool.
Yeah.
Twice a week, you drive out into the middle of nowhere, the jungle, and they would have a big old light bulb over a little ring, and it would be one boxing camp versus another.
Oh, that's badass.
It's their national sport, so everybody there sends their kid to go do that, hoping this could be our ticket out of farming.
So I've done 3 MMA fights, and I have 1 kickboxing fight.
No way.
Yeah.
You done 3 MMA fights?
Yeah, and then jiu-jitsu.
Email those out the video.
I was gonna. So on my main YouTube, if you look, I actually have I did a whole vlog. So one of them was actually, Conor McGregor's coach, his name's Owen Roddy. He's like his striking coach. He tried to do a college theme branded MMA organization here in America.
Oh, interesting.
And then I was the main event for that, representing UCF. Even though it wasn't officially college, it was like UCF, and I was against a guy from Illinois. But
cool.
Yeah, knocked him the fuck out in the first minute.
God,
you gotta do what I gotta do, But I have a whole day in the life vlog of me doing the fight, backstage, warming up, everything.
That's crazy.
Yeah, it's cool.
Oh, MMA. Yeah. And what? I guess my last question for you. I think I was listening to you interview a guy, Dylan.
Yeah, Dylan Marma.
And you were saying, that this is like a stepping stone for you to whatever comes next. And I'm curious, what is You seem to have a lot of fire, underneath you. What's driving?
My long-term goal, reason why I got in real estate, inspired by Grant Cardone with just buying real estate deals. I basically want to get to your position next.
Have just enough to kind of support a lifestyle.
Yeah, I want to syndicate deals, get to some type of like financial independence position. Like right now, I'm still working for the dollar, and my plans right now is scale up production by the end of the year, start hiring my own employees within my own team, or if I have to, break away from the brokerage. But I don't plan on that. I like the brokerage.
Yeah.
But scale up my own team, and then through next year, hopefully the team's more self-sufficient for my active income, and I could focus on buy side, rolling in my money as like an LP as equity in the deal, or actually just trying to buy a deal myself, raise money. Like that's my plan for next year.
Cool.
And then eventually I want to get to your position where I have 400 to 1,000 units, and then there I'll kind of brainstorm the next goal.
Yeah, so, it's cool. It's
so you're like you're what I'm
level.
hoping to get to my next stepping stone.
You'll be there, man.
Appreciate it, man.
Yeah,
dude, awesome. Thank
Great
you for sitting with me and everything. And then if someone wants to get a hold of you or invest in the deal, this goes out to like 5,000 guys that own parks. So how do they get a hold of you, or best way to reach you?
elkhorngroup.org is probably the best way. That's our website, and my email address is my last name, Noel, Noel at elkhorngroup.org.
Cool. All right.
Or Noel. My dad prefers it to be pronounced Noel. So
Noel. Okay.
Dad.
All right. Yeah. Awesome. Thank you again.
Yeah, great to see you, bud.